How much insurance should you buy? Some physicians believe the answer to that question is simply as much as you can afford. Unfortunately, they don't have the insight of real-life medical malpractice cases. The first question that's asked by plaintiff attorneys after your vital information during the discovery phase of a malpractice suit is how much are the policy limits that are associated with a policy in question. The reason why they ask this question is because they want to make sure that they keep the physicians with the largest policy limits involved in the case. Ironically, those physicians who insist on purchasing high limits to protect themselves are typically the physicians who've never been involved in a malpractice lawsuit as a defendant. Proof of the deep pockets theory of law applying in real life is OBGYNs. OBGYNs produce the most sympathetic as well as most catastrophic malpractice cases throughout this country. Yet OBs choose the lowest policy limits because they understand that if they have higher policy limits, the more likely they're going to stay in that malpractice suit. Let's look at some important case law that also helps answer the question of how much insurance coverage should you buy. In 1974, the New Jersey Supreme Court rendered a decision in what's called the Rova Farms case. And that case happens to be the single most cited case by New Jersey plaintiff attorneys. It established bad faith, and when bad faith can be used to sue an insurance company if they fail to reasonably settle a claim and expose the policyholder instead. Now, bad faith for insurance companies provides protection for policyholders. Why? Because if an insurance company chooses to not settle a case prior to going to trial, and then at jury verdict, that verdict is above what the policy limit that was purchased by that policyholder is, the insurance company can be liable for the excess judgment. Now, what this does is it also renders the consent to settle clause that a physician has in their policy virtually meaningless. The reason why I say this is because when a physician purchases a policy and believes that they have the protection of a consent to settle clause, they believe that they can prevent an insurance company from settling a claim that they think should be defended. However, real-life application of this consent to settle is far different than what it seems. When a medical malpractice insurance carrier believes that the best option is to settle a malpractice claim, the first thing they'll do is contact the physician and ask for their consent. When a physician believes that it's better to defend the case, they believe they're exercising their consent to settle. Unfortunately, what most physicians don't understand is the malpractice insurer will subsequently go to their office and ask that they sign a document called a waiver of liabilities. That waiver of liabilities is a consent form by the physician to make sure the physician does not sue the insurance carrier if there's a jury verdict that goes above their policy limit. Essentially, a consent to settle clause is meaningless because if a physician ever utilizes that clause, they may be exposing themselves to losing their personal assets. This concludes our third video series. The next video series is entitled The Impact of Mix's Insolvency and What Did We Learn?